class. It's the Quintessential Show.
Indeed it is. It is the Quintessential Show right here on qessential.co.za and Quintessential ZA's live YouTube stream. And welcome. If you are in the chat, say hello. It is the Quintessential Show. It's a show where we talk to the movers and shakers in South Africa. Today, as you know, we have Mr. Petri Redelinghuys. He is the founder of Herenya Capital Advisors. Herenya Capital Advisors, a niche stockbroking and trading firm that cuts through the unnecessary extras, allegedly. Is that true? We're going to find out. Petri, welcome to the Quintessential Show. How are you doing today?
Thank you for having me. I am very well. I've had a look at some of the other guests you've had on here. I feel very honored to be amongst such esteemed company. So thank you for hosting me this evening.
No, listen, man, you're a trader, and you do the social media thing. You do the digital information distribution thing where you tell people, buy the dip and sell high type of thing, So, but listen, so now I've seen Herenya Capital Advisors. The first question I had, because this has been throwing me for a loop for a couple of weeks now. I need a place to get GameStop stock. Can you help me with some GameStop stock?
Yes, yes, we can. We can do everything from normal equity on it to CFD to futures to options to warrants to pretty much any derivative and or equity product. Almost around the entire world.
Because eToro and IG, they totally cut me off. It's like they're not doing any, like signups recently. And now my account is just, validating itself there, and it's not happening. And I can't get GME exposure.
Yeah, so that's a long story. I think maybe we shouldn't get into that one. But essentially, we are able to open accounts, and if you want to buy GameStop, there's two different options for you. You can either do it through a local account where you make use of an asset swap, which is a bit more expensive, or you can go sort of directly offshore, and then you can trade GameStop normal equity and or options or CFD or whatever it is that you choose. And in the US, it's like $2 per trade. So it's very, very cheap. It's amazing, actually. The US market is an order of magnitude cheaper to trade and interact with than the South African market, right? You can buy like 100 Apple shares for $2, that's a lot of exposure. If you had to work out the basis points on that to do that trade locally, it would be thousands of rands, right?
Yeah.
But yeah, so you can come and open an account with us, and we can get you some GameStop. I wouldn't be chasing it now. What I've been doing over the last week, or twice this week at least, is I've been buying the March 12 calls at 800 with an 800 strike. So it's like these far out the money call options. You can pick them up for like $1. And then I've sort of tried bid it around $1, sell it around $3, $3.50. So I've done that twice this week. So those are some good trades. And then one of the other traders in our team, he's doing almost the opposite. He's sort of shorting the stock every time it gets really ridiculously high. And then he's selling sort of far out the money put options on it. So he's collecting premium. He's doing weekly puts. So there's so many different ways to play this thing.
Okay,
as long as you can keep a handle on your risk.
You've got me going. You've already lost me, Petri. Listen, welcome to Quintessential Show. We do the basics here, Petri. It's like we want to start at the beginning. But let me quickly tell you something. Well, luckily you didn't say you're stocking up on Dogecoin, because we don't need more. Well, actually, we do need more guys going into Dogecoin. Please buy Dogecoin, Petri. But anyways, let me quickly tell you something about the Google algorithm and how spooky it is. When I was looking for a title to title your video on this channel, I was looking for a good title that might get us some clicks down the road. And I thought, let's keep it to the basics on this episode. And I basically, titled this video, How to Become a Trader. And when I put that phrase into Google, a News 24 and Fin 24 article pops up. And who has written that article? Mr. Petri Redelinghuys himself, January 22nd, 2019. So I think this was meant to be. So Petri, you've been writing about this topic for quite some time now, about how to become a trader. So tell me about your passion for the markets and give us a brief rundown of how you started Herenya Capital Advisors.
Okay, so there's a few sort of multi-layered answers to that. How to become a trader. I think this is something that I've been relatively passionate about because it's something that I wanted to do for a very long time, right? I sort of started out in a bank. Well, I started out in a pick and pay packing packets. That was my first job. But at some point, I sort of figured out that what I wanted to do was trade, and I went on this huge journey of sort of just work for knowledge, not for money kind of attitude, right? And I did everything from, I think my first entry point into actual trading was working as a sales guy at one of these companies that sell these trading courses, because I was just like, well, for every course I sell, I can go on the course with the client that I sold it to. And that was cool. I did that until it was a few months, maybe 4 or 5 months, or maybe 7 months or somewhere around there, until I'd sold one of each course. And then armed with my knowledge of, now I know all the tricks and all the things, and I've done all the courses, let me go and trade. I joined a day trading firm. And 5 months later, I'd had to sell my Xbox to pay my margin calls. So it was a very hard, sort of journey to get into any sort of professional capacity. Later on, obviously, I joined industry as such, spent some time at asset management firms, hedge funds and that kind of stuff, and then stockbroking firms. And I think the whole thing is, where the passion comes from is almost like we have there's a problem in the South African marketplace. And it's not obviously just limited to South Africa. It's a global problem, but I think it's more predominant here than it is in most other countries. We've got a host of offshore OTC brokerages. Just for reference, OTC means over the counter, right? So they do OTC derivatives a lot of the time, where you trade, when you're trading a spread-based instrument, you're not actually trading in the actual market. You're kind of trading against the market maker. So every time you lose, they win, and vice versa, right? So, I mean, from all over the world, a various assortment of different sizes, from massive multinationals to smaller kind of Cyprian registered OTC, brokerages, are descending on South Africa and making a huge amount of money here. Forex trading in South Africa is big, right? And the problem with that is that a lot of the time, that Forex trading is done OTC against like a liquidity provider or against the house, if you will. And very often the marketing tactics employed, I don't think are always as honest as they should be, right? You look at some of the ads you see on Facebook or whatever the case is,
right?
And it's all these it makes it really easy. You can just start, and there's now a bit of a trend amongst these sort of CFD, OTC, CFD platform providers. Invest now. What they don't tell you is that you're actually trading a derivative, right? Why would you use a derivative to invest? So part of this, this sort of educational drive as such to put out stuff about how do you become a trader is just really around creating realistic expectations for people, because the internet paints it and the market is painted as this, well, it's so easy, you just got to follow these 3 steps, or, unleash the trader in you, or this or that, or we've got the best, easiest platforms and the lowest spreads. And none of those things make you a successful trader, right? And, particularly people who are in this, this trading guru space where you subscribe for, trading tips or signals, or you do a course, and this course is now going to teach you to be a millionaire by, Tuesday. And, it's this easy thing, right? And the reality is, man, it's not. It takes years to really get a handle on what you're doing, right? And what happens in the South African context, we have a population that's largely unemployed and poor and desperate and looking for a way out of their financial circumstance. And then, in walks a guy who wears a big fancy watch, fancy shoes, drives a GTI, buys the whole bar around of drinks and says, I'm a Forex trader, pay me 10 grand and I'll teach you to do the same. So people who are already in situations, go and take a loan or borrow money from an uncle or an aunt or whatever it is to pay for this course. And then they fund their OTC, market-made trading platform or account. And, very short amount of time goes by before they've lost all their money. And now they're out of pocket for both the money they've invested in the course and the money they put in their trading account. And they're actually worse off financially than what they were before they started. So it's something that I feel relatively strongly about, and it's something that sort of just falls just outside of regulation because they're not actually providing a financial service; they're selling education, right? So there's no real, consequence for these guys.
Yeah, look,
So
it's frightening. It's frightening to me. Sorry to interject. I just wanted to quickly say, yes, on social media people see these ads, but it really bleeds through into everyday life. I mean, I was sitting at a Starbucks about a year ago, and I heard a guy with a laptop open with a woman next to him, like talking about forex, and I could tell, me being an investor that has exchange traded funds in an easy equities tax-free savings account, for example, knowing that I started my investment journey without forex, right? I'm yet to get to forex type of thing, but this guy had his laptop open, obviously now showing this girl how to do forex, and I was frightened. I was like, yes, he should. I don't know how are we going to attack that at the education level. So this is what basically went into the beginning of Herenya.
Yeah. So you get these calls. I got one today, ironically. It's like, hey, Mr. Redelinghuys, yeah, this, how can I help? No, are you aware of your indirect involvement in the JSE? What are you talking about? Oh, and I know what's coming, right?
Yeah.
Like some software program that they're going to build up to sell me, because it's not the first time they phoned me either. I don't know why they keep phoning me.
Algorithms
but
of
it's
the
like
future.
the sales tactics are so dubious, man. Like it's, because they sell you on fear or greed. Those are the two things, right? And it's like, if you look, like, who's your cell phone provider? Vodacom. Oh, you use Vodacom. Oh, how much do you pay a month on your cell phone? Oh, $500. Oh, okay, so you pay 6,000, 7,000 rand a year for your. Don't ever do maths on stream, kids. You do 7,000 rand a year on phone bills. Well, if you took 7,000 rand and you bought here and you sold there and you bought back again here and you sold, you would have made 200,000. Ah, look at that! Your phone bill is now paying you, and it's like this amazing sales tactic. But it's just, man, it's just. I think there are some firms out there that are doing it right. Like Easy Equities is creating a market much like Uber did, where traditionally stockbroking services do have a relatively high barrier to entry, right?
Yeah.
And they're breaking that barrier down and they're attracting people into the market, which is fantastic. But they're not selling the dream of like, hey, let me teach you how to forex trade and you're going to earn a second income. Yeah. All you got to do is put 20 grand and you're going to double your money every month. That's never going to happen. It's going to take, there are some people who can do it, but you know what? They've been trading for 20 years.
Right. So Herenya, as a stockbroker, how did you get this done? Like, how do you go from now these jobs that you had in day trading firms to suddenly starting a total boutique-esque, stockbroking firm? How do you go from there to there?
So it was almost 5 years ago now that I started actually sort of, and I was very, very fortunate that I had a good sort of solid base of clients. It was actually only 3 or 4 guys, to tell you the truth. And we were working together very, very closely. And then, I don't know, it was just, I'd been to a guy that ran funds. I'd been to, larger sort of more wealth management / type businesses. I've been in a number of different stockbroking environments before that. And I just felt that there was no one who really actually, really cared too terribly much about the outcome for the client, right? And I felt I wanted to do it right, if that makes sense. So I started Herenya. It was sort of a spur of the moment thing, really. It was kind of like I went home one evening and I registered a company, and then there were a few of us that were supposed to start it together, kind of thing, after a few weeks of talk. And when it came down to it, I was the only one, right? So there was some tough times in there in the beginning, but yeah, I've really just sort of been focusing on how do I create an environment for the clients that trade with us in which they can learn from. And the way that it's sort of evolved over time, which is really amazing, is, we've got real traders who are involved with Herenya. And we're not saying like, hey guys, do this course. Hey guys, learn these 5 steps. What we're really trying to do is learn by osmosis. So we try to create an environment in which people are very serious about trading. So there's a memes channel, but we're not here
memes
to talk
future,
smack.
Man. Listen, man, I saw roadblocks on Bloomberg today. This is where we are.
Yeah. So, yeah, memes are actually amazingly powerful. I've got a huge opinion on that. I mean, memes are really more than just funny pictures. They're really actually sort of very complex ideas that are communicated very quickly to people.
Yeah, look,
Whether
I
that's
mean,
something like "Make America Great Again," right? That was a meme.
yeah, exactly. I
Um,
think this whole memetics movement has totally it's gone from elections and now it's going into markets and it's disrupting to a high degree.
yeah, it is. Hey, look, I mean, also maybe our discussion is now drifting a bit, but this is maybe a sign of the times. Where you have this sort of the market in general has this feeling of invincibility. Everybody has diamond hands because they want tendies. That's like extreme excess, right? It
Yeah.
reminds you of the late 20s, maybe. I don't know. So we'll see how it ends. In any case, so what we've done is we've started sort of building just a community, and it kind of started on with an online chat. I could put a chat thing on the website, and okay, cool. And then as time went by, that sort of moved into a more capable online chat tool. And the community has just been growing and stuff. And what we're trying to do is really sort of teach by osmosis. So we have a professional environment where there are real traders talking about real stuff, sharing real information, sharing what they see. And the clients have a front row seat to that, right? And they can ask as many questions as they like. And what's starting to happen is as the community is growing, the ones that were there from earlier on are a lot more experienced. So they're sort of starting to pass that coaching and mentoring down the chain. So, so it's really sort of a very cool environment. And the whole thing is really just, a discussion I have with a lot of people come and say, oh, I want to trade full time. Can you do it? Well, yes. Okay, fine. We have the accounts that allow you to trade at really incredibly ridiculously low brokerage fees, right? If you're an intraday trader, for example, where, you've got limitations around not being allowed to hold overnight positions and that kind of thing, but you can trade for 0.06%.
Yeah.
Which is really, it's like almost a quarter of the price, just over a quarter of the price as a traditional CFD, right? Yeah. And already at 0.2, CFD is relatively cheap. So in any case, so those, they all come in and say like, well, can I, I've got X amount of capital, I want to do this for a living, how long is it going to take? Well, if you work 8 to 5, Monday to Friday, and you read in the evenings and you study and you do your journals on the weekends and you do all the things you're supposed to do, realistically 2 to 3 years before you're going to earn an income, right?
Yeah.
Because it takes a long time and it takes a lot of hard work. And I think that because we're relatively serious about it, the clients within our community get that it takes a lot of work and they're willing to put it in. So it's almost like you have this discussion while you're onboarding the person, like, listen, if you've got, and it's, it sounds silly, but it's part of the reason we don't really take smaller accounts, because if somebody comes with like $5,000 who thinks, oh, I'm going to be a millionaire by Tuesday, I'm just going to gear my $5,000 500 times and I'll be fine, right?
Yeah.
Often the expectations there are mismatched. So you just have to sort of send them back to the drawing board. Like, look, save up capital, go and read these books, come back when you're ready. And then, okay, fine. From here, how do I start? Where do we go? Okay, trade smaller, trade less frequently.
Yeah.
Be more careful.
But you see those resources and books, people also need to be directed in the right terms of resources and books, because, everyone, the joke is you have Rich Dad, Poor Dad and you're ready to trade. And that's obviously not the case, right? I mean,
Rich Dad, Poor Dad's a good book for mindset though.
For sure. There's no debating that. But let me give you an example. So let's talk CFDs for a moment, because Herenya Capital Advisors, say I'm a beginner investor in terms of coming to Herenya Capital and I'm ready to trade different sorts of, products that I'm not used to, trading with. Now let's talk CFDs. When you go to IG.com, for example, and this is how South Africans and people around the globe are starting to trade. They go to these websites because somebody asks, where can I get GME stock? And then they say, I don't know, IG or eToro or one of your, platforms.
500 or whatever it is.
Right. And so IG.com, when you go on the website, you get this red band at the top of the website and it says, listen, CFDs are complex instruments and they come with a high risk of losing money rapidly due to leverage. 75% of retail investors' accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work. So, sincerely, Petri, I'm here to talk about...
So how do they work?
How do they work?
Keep bouncing this thing around. All right, okay. So there's two different ways that you can do... Well, all right. At its heart, a contract for difference, CFD,
Yeah.
is a contract that you take with obviously to every contract there's a counterparty. All right. So I think let's start with a normal share. When you buy a share on the JSE creates or has what's called the central order book, right? So your order to buy 100 Sasol shares goes into the central order book and it sits. There's a bid and an offer price. So you want to buy 100, so you'll be on the bid side at whatever price you put. And then somebody has to physically sell to you. Someone has to look at that bid offer spread and say, well, someone wants to buy 100 shares at $200, and someone wants to sell 100 shares at 201. So now if I'm a trader, nothing happens until somebody decides to either buy at 200, right? So, and then what happens is those orders go through the central order book, they get matched, and then from there a whole settlement process takes place. But 3 days later the transaction settles, and we have this simultaneous irreversible delivery versus payment, right? So it makes sure that you have the cash in your account, make sure that I have the shares in my account, and then simultaneously they swap the two, right? So that's when you buy a normal share. So now when you buy a CFD, instead of having the counterparty being another trader on the other side of the exchange, the counterparty is now what's called a liquidity provider or a market maker, right? So instead of buying the actual share, you're now buying a contract on the difference in the share price from when you buy the contract to when you sell the contract. So I buy a contract on 100 shares at 201, but I only benefit the price difference between, whatever the price moves of the underlying share between from when I buy it to what price I sell it at, right? So what happens here is there's two different types of ways that this can go now. You've got an OTC model, or by its very nature, a CFD is OTC because it's an over-the-counter contract that you're trading against, like a liquidity provider or a market maker or a bank or whatever it is, right? But there's two ways that this can now be split. So you can either, as the big broker, say, well, these contracts, I'm the counterparty to all the clients that trade these contracts. And I know that, I don't know what the stat was that you just read a few moments ago.
Well, I said 75% of retail investors.
Yeah, right? So most people lose. Yes. So, I'll make us market because I know that if people put money in these accounts, 75% of them are going to lose it. And if I'm the one that the counterparty is, I guess I'm winning, right?
Yeah.
So not everybody operates like that. Some of the bigger institutions, the one that you've mentioned, does sort of like more of a complex hedging strategy where they sort of net off positions and it gets really very complicated, I'll be honest with you. Right. And I don't know the inner workings of their risk management, so I don't quite know how they do it. But, so there are mechanisms in place to hedge themselves so that, they don't get in trouble kind of thing. But then there are also sort of a DMA way of doing this where, for example, you go through a bank generally, and the bank, when you place your order in the market, the bank goes out and buys the actual stock and then writes the contract for difference to you, the client. And they've got the exact position, the exact underlying position that you have, they've got as a hedge, as a one-to-one hedge with you. So the only difference, so they actually going through the central order book, buying the real shares, taking it onto their balance sheet, writing the contract out to you, and then charging you brokerage and interest and all sorts of stuff in the process. So that's very complicated, I guess. In essence, what happens is instead of having to pay, let's say, you want to buy 100 shares for 10.
Oh, there we go. We've got a little dip. Petri did say he's on a cell phone router tonight, so he might be coming through in just a second. No, well, we got you back. We're back, Petri. Continue, sir.
Okay, cool. Alrighty. So essentially, what it allows you to do is leverage your money, right? So if you want to buy 1,000 rands worth of shares, you only really have to put down 100 rand deposit. So in the case where in the DMA model, right, in the direct market access model. What happens is the bank goes out and buys 1,000 rands worth of shares, takes a 100 rand deposit from you or a 10% deposit from you, and charges you interest on the 900 rand that the bank is lending you.
Yeah.
Because they've gone out and bought the shares, right? So they're loaning you the money, and they're charging you interest on that. So that allows you then as the trader to now trade with 10 times more money than what you actually have, which is where the risky part comes in, right?
Yeah, because if it goes down, you're on the roller coaster meme.
A 10% move against you is suddenly 100% of your exposure.
Yeah.
So if you've got 100,000 Rand in your account and you put 100,000 Rand margin down, you've got a million Rand position, that thing moves 10% down, your account is gone.
Right. Is this where stop losses come in, right?
This is why stop losses save lives, yeah. But also, I think this is where you have to acknowledge that, like, okay, cool, just because you can buy 1 million Rands worth of stuff for the 100 grand doesn't mean that you should, right? It's actually a very, very bad idea,
right?
to tell you the truth. So you've got to be conscious around how do you manage risk, how do you contain, how do you ensure that your losses don't get out of control if they do, because sometimes you also think like, okay, I'll use the 2% stop loss rule because it's like a very popular one, if I get a trade wrong, I lose 2% of my capital. Great. Now I've got 10 open trades and they're all longs and the market falls 10%. And suddenly 20% of your capital is gone because all your trades stopped out.
Yeah.
So does that 2% stop loss rule really work? Maybe not, right? So you've got to think a little bit. So there's lots of different ways, obviously, that you can create risk management rules for yourself. But something that you have to be conscious of is exposure, because in that particular scenario, you calculate your position size based on distance to stop, right? So if the share price moves 2 Rand down, I will lose 2% of my capital and then stop out, and that's fine. But that might mean that I take a geared position in that stock rather than, like a responsibly sized position. So you might have only 5 trades open, but your account might still be sitting at 300,000 or 400,000 Rand exposure while you've only got 100,000 Rand in cash, and you're actually running 4 times the risk that you have money. It's like, so that's where most people trip up, actually.
Well, tell me now, the Herenya community, right? Because you kind of built a small amount of, traders in your community. And now, do these traders talk to each other? Do you advise on the daily type of thing? Is this kind of conversation we're having now what people get almost every day when opening an account with Herenya?
Yeah, I don't know if I should show you, actually. We, if I can open it. Hang on, there's too many windows here.
Yeah, you can share your screen. I'll just have to reposition us. You surely can.
All right, so let's see if I can do this.
Let's check if we get it up here.
Okay, wait a minute. This thing is. All right, give me a sec. So, essentially, what we've got is we've got a whole bunch of different sort of channels, if you will, that people can talk in, and they're sort of topic driven, right? So. Some of them are, intraday, specifically aimed at the intraday traders. Some of them are sort of more. Okay, I can't screen share. Sorry.
Okay, no worries.
Disabled.
Paint with your words. Paint a mental image for us.
Paint with numbers. So basically, what we do is we have sort of different topic-driven channels, right? So you've got market-moving data, intraday trading, swing trading, offshore investing, crypto. People want to talk crypto. There's a memes channel. Educational resources, a couple of really nerdy guys, who are into coding, so they've got their own channel, stuff on tax and whatever, right? So basically what happens is we do like a market preparation thing with the guys every day, and girls. There are some girls in there. And we kind of get them ready. So we do a morning note kind of thing. We don't put it out on Twitter, but we put it out through the community to the guys. And this contains stuff like upgrades, downgrades, overnight news, expected results, basically just a couple of indicators also to see how much the Rand moved since we closed, for example, or gold or whatever. There's a few things that we keep an eye on. So we do a process in the morning with the people or with the guys in the community to sort of prepare them for the day ahead, right? And then throughout the course of the day, they're free to talk to one another. And obviously we're also involved. So some of the stuff we put on our Twitter accounts is like the tip of the iceberg, man. We're talking and sort of guiding the clients all throughout the course of the day. Really just keeping them abreast of what we're thinking, what we're doing. And then obviously they do the same, right? So what a lot of people will do is put up a chart and say, well, this is my setup that I'm seeing. What do you think? And then other people will chime in. And we do the same with our stuff, right? Because a lot of the time, just because we see something doesn't necessarily mean it's the only way to see it. right?
Right. Yeah.
Or we might miss something that you might not. So your input is valuable. So one of the sort of things as you join, there's a
There we go again. Well, basically, what Petri is talking about is technical analysis. You know, these charts that you read. All right, Petri, you're back. You went in and out, but you're back now.
Oh, sorry, I'm back.
Yes.
I don't know what's up with the internet, man. I'm sorry. I don't want
Don't worry,
to throw
dude,
the big
dude.
red telecommunications company under the bus, but
Live South African internet television is bound to go, awry here and there.
So yeah. Yeah. So it's not just technical analysis though, right? I mean, there's a lot of fundamental stuff and research that gets done as well. So, for example, Marion Roberts has been a topical sort of thing. So we sort of start talking about Marion Roberts and, look at what earnings are, look at this, look at that. And somebody else will do a bit of research and say, oh, I found this is interesting. And so we everybody works together, right? And I think a large part of it was born from, I had spent some time in proprietary trading firms, day trading firms. I also was lucky enough to get to spend a day with Herenya Capital in New York. And you kind of look at what makes these prop firms successful, what makes the traders in the prop firms successful. It's not that they're the smartest guys in the whole world. It's not that they're even the most disciplined guys in the whole world. Look, they are generally a bit more disciplined than us, but sometimes they can run amok. And I know the Storm guys are a lot of fun, but the reason they're successful is because they work as a team, right? They work together. They hunt as a pack. Not in the sense that, like, for example, you might have a view on blue telecoms, and I might have a different view. But now we've spoken about it, and there's 5 other guys that heard our conversation. The minute a Sen's article on blue comes, you'll shout it out, right? So now all of us get an opportunity to react to the information as it came out immediately, because 5 of us are on the lookout for the opportunity, right?
Yeah.
So that's kind of why it works well. So instead of it being a one-way stream of ideas and information that we're sending to people, it has to be engaging, it has to be two-way, and we have to try and help people find their own way of trading, right? A lot of the time people come in and they just, particularly when they start out, it's always, everybody's it's one of 2 types of people. Either they're very shy and they don't want to ask anything, or they have all the answers, right? Generally, over time, they kind of realize that A, you can ask questions, it's okay. And B, you don't have all the answers, and in fact, nobody does, right? So what we do a lot of the time is literally just encourage people to trade smaller and be more careful. And, where's your stop loss? This is a great idea. Where do you stop out if it's wrong? What is the backup plan if this goes, we're always kind of reinforcing that risk management thing. And what happens a lot of the time is people come in and they, for example, you put them on a sort of lower price trading account because they're more active, more serious, and they're going to spend 8 hours a day doing this. And they track loss and start trading like mad things, and you got to be like, guys, slow down, you got to look in his account and say, listen, you've got 10 times as much gearing as you have money. And it's all in this, one Forex position or this one crypto position or this one index position or whatever. Like, you're taking so much risk. It's unreal. Why don't you close this position?
Yeah, I think what you're getting at to a small degree is authentic mentorship when it comes to trading, and that's I think that's going back to how we started the conversation with fly by night guys that are like, invest through us. We need more guys like you to have conversations like this and do the mentorship with somebody to teach them trading, kind of with like training wheels on. You don't get the bike to start with, you start with the training wheels, right? And that's the whole thing. But
exactly.
I hear now that you are wanting to launch a new educational project. I've taken a look at your YouTube. You did 1 or 2 streams where you try to show the trading strategies on a certain chart, for example, and I see a lot of that happening on YouTube as well. But tell me, are you going to go a level deeper with this next project? What do you have coming up in the pipeline?
So the YouTube thing was quite a bit of fun. It's hard to maintain though,
for sure. Yeah.
And I lost a bit of momentum with that as well. So the idea now is, however, and we're hoping to start recording on the 9th of April. The studio time is booked, so we have to start recording on the 9th of April.
That's paid for.
It's, but basically the idea is, there's a lot of stuff that people want to know,
Yeah.
but it's not what they need to know. If that makes sense, right? I always think of that line from Anchorman. Why don't we just tell the people what they want to hear? So what we're going to do is we're going to focus on sort of, I want to say, financial/trading education. And I start with financial first because that's really where it starts. Everybody wants to know how to make $1 million and which indicators to use and what constitutes a buy signal. But how does fractional reserve banking work? What is the role of the banks in the financial market ecosystem?
Yeah.
These are the things that you need to know, right? You need to understand how the system works. So we're going to start with like an introduction to finance. So the idea is actually what we're going to do is we're going to work through a textbook, a university finance textbook. And we're not going to like lecture the stuff. We'll have structured discussions and whatever around it.
For sure.
But the idea is to sort of pass this knowledge through. So, okay, well, what is the finance environment? Why do companies list? How do exchanges work? How do interest rates work? Why are treasury yields important? How does the entire sort of system fit together? And once we've covered that material, then we'll start going into, okay, well, how do you now do analysis on companies? How do you pick trades? What are the mind games that you have to play yourself, or your mental game aspect of it? That trading psychology part is something that we'll talk. And I'm not a psychologist. I've just learned a whole bunch of lessons really the hard way.
Yeah.
And the idea is to get guests in that are smarter than me and more experienced than me. And then we cover books, right? Because that's really where the information is not in doing a course from some guy on the internet, but it's covering a textbook. And you know what? For $200, you can buy some books that are, $200 for a book, it's a lot of money. It's like $3,000 for a book, right?
For sure, yeah.
But that is so much more valuable than paying $10,000 for a trading course.
100%.
Because you've got that book forever, number one. Number two, you can keep going back to it. And, like if you look at a technical analysis book, for example, one of the books that I think is really great from the Chartered Market Technician course material is one of the textbooks in that. And it shows you like, okay, what's a stochastic oscillator? All right, well, this is what it does. Cool. I'm sure most people know what a stochastic is, right? Yeah. But let's go into what is the maths behind this thing? Let's understand how it's calculated. And once we understand that, then we'll understand what information it's actually giving us.
For sure.
And how to interpret, how to use it, right? Okay, so that's more on the technical analysis side. We're going to start with, we'll start off with the fundamentals, intro to finance. What is the ecosystem like? What are the macroeconomic things that we have to watch? What is the importance of policy on equity markets and, all these sort of interconnected stuff. And we're going to start with that and build it up. And it's going to be in podcast form. So not video, but only audio. Okay. And it's going to be free, right?
Yeah.
And it's going to be freely available to anyone who wants to listen to it. And that I think is going to be, so I'm hoping that, makes a bit of a dent in I want to learn how to trade. Well, this is where you should start, right? Before you start putting money at risk, it's like driving. Just because you can reach the wheel and the pedals doesn't mean you know when to stop and when to go and when to yield, right? You got to learn the rules first.
Yeah.
So I'm hoping that people, enjoy it and find value in it.
No, look, I think it's the right way to go. Let me tell you the beginning of my investment journey. I just got out of university, started getting a salary, and that's when I started listening to something like Just One Lap and the Fat Wallet Show, right? South Africans who haven't discovered those, really useful resources are doing themselves a disservice, because then they start talking about things like exchange traded funds and all these tax-free savings accounts that you can get. And that's the thing. South Africans who are just leaving university, who have not been given financial education, a podcast is starting to wake them up and actually get them started on at least an investing journey. And I think through my channel's history, I think we started investing and now we're going trading, right? Where it's like reading the technical charts and stuff. And I'm actually glad that you guys are going to focus on a textbook's technical analysis. Because let me tell you, you do these Udemy courses and the guy just opens up the course and he goes, oh yeah, check this reaction, boom, 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 boom. And people need to be told what a candle is, why does the candle extend a little bit, like a hair goes up and a little hair goes down. People in South Africa particularly, they need that back to basics teaching.
Yeah, look, and I mean, stuff like candlesticks and whatever, there are some online courses that are worth doing, right? So to learn that type of stuff, you can, but also most of that stuff is freely available, right? You just need to Google and you'll find it.
Yeah.
So yeah, and I think to echo what you say, like we really leave school, we have no idea. You don't even know how a credit card works.
Yeah.
Do you know what I mean? It's like, I could just buy stuff with money and I'll pay it back. But did you know that if you have an automatic payment order on your credit card and you settle the full amount to the cent every month, you never pay interest. You got 55 days to pay. And the only reason I know that is because I actually worked in a bank, right? Nobody taught me that.
Yeah.
Like it's so we have a huge problem with financial education and investment and whatever. And the way that it's, they dress the pig up is like, well, trading is the answer, but it's not. The answer is really, for 90% of people, investing is the answer, right? And it's starting slowly. Trading is like, once you have a bit of risk capital that you can lose and you want to play around and try your hand at something, then you can start trading. Your first mission should be to build up capital, right? And that's by doing tax-free savings accounts, and that's by doing ETF savings accounts, and by eventually, when the sort of chunks get a bit bigger, you can start buying individual stocks. And eventually you have a bit of a cash buffer, and okay, now I'm ready to trade. You know.
I think I bring
But
it up
you're
because
right.
the irony in South Africa is that the government almost never teaches you how to either A, invest, or B, trade, And so my question to you is, do you reckon that investing and say for instance trading could be a mechanism for nation building? I mean, doesn't it help the economy basically,
I think that so there's a big strong move now from the regulator actually, to sort of tighten the ring around these sort of market makers, if you will, right? And I think that if we can almost, it's going to sound, I don't know how it's going to sound, who knows, we'll just say it. If we can prevent the big international companies, well, not necessarily even the big international companies, they're fine, they follow the rules, right?
Yeah.
It's the companies that are like registered in Cyprus or registered in, I don't know, Malta or whatever. Sorry to anyone from those countries, nothing against you, but they're not regulated in South Africa. They're registered outside of South Africa. They operate outside of South Africa, and maybe just have a server here, and they don't follow the Financial Services Conduct Authority rules because they're never registered for them. And people are investing millions into, and I mean, when I said earlier that these people are flocking, all these companies are flocking to South Africa, it's like the biggest growth market in the world for them is Southern Africa, right? And none of them are sort of locally registered, none of them have local offices, or none of them, obviously there are some, generally the bigger ones that are regulated have those things, right? Otherwise you couldn't get regulated here, right? So if we can prevent those guys from operating in South Africa, that would stimulate our local market. It would probably, turn more people off of Forex and onto equities, which would increase volume through the JSE, which is great for the general investor because it creates more liquidity, fairer prices, or better price discovery. And we're not losing all that money to, fund it with your credit card in dollars. I mean, that money goes to Cyprus, right?
Yeah.
Keep it in South Africa, create jobs here. So that would be one thing. And the other sort of thing is if we have to drive education. And I think this is something that Easy Equities is sort of spearheading at this stage, is maybe not so much the education side, but the savings culture, right? We have to break that instant gratification. I want everything now immediately because, it's 2021. Why can't I have things now?
Right.
Well, things worth having take a while to get, actually. So I think that it's very important that we have conversations around, what is really important when it comes to investing. It's not the flashy trading platform that you can, double your money in a day on GameStop. It's actually like the boring long-term stuff where you start building responsibly. And if you are going to trade, believe me, I know guys that never have to work again, but they have been trading for 10 plus years. So it takes a very, very long time. And the success rate, I did a thing on the Herenya website, shameless punt. under HCA Trading Useful Resources presentations.
Mm-hmm.
There's a presentation called The Realities of Trading. That presentation I gave at some Forex Gala event. Who knows why they invited me. And I was like, I want to be paid. And I said, we can't pay. I said, well, then I need to be the headline speaker. So they're like, okay, fine.
you drive a hard bargain,
whole day. Oh, yeah. So they had this whole day of people, telling about, well, for this strategy, I bought this morning, it's Saturday, number one, so the markets are closed. This morning, I bought sugar futures and made $2,000. And everyone in the crowd's, amazing. And at the end of the sort of, end of the day, I'm now the last speaker. And I'm like, guys, did you enjoy? Yes, cool. Did everybody learn stuff? Yes. Okay, lekker. So my presentation is a bit different. There was this quantitative study done in Brazil where they tracked 19,646 traders. It's weird. I always remember that number.
Yeah.
And they sort of day traders, and these are the controls they use, and this is how they did the study, and and what are the results? 0.24% of people make it.
Unreal.
3 out of almost 20,000 people make more than $100 a day.
Jeez.
Right?
Yeah.
Everybody else either makes minimum wage or less, and that's only 3% of them, and the rest of them lose money. Right? So obviously, my little speech there was cut short, but that is. I
wonder why.
There was a room full of these offshore international brokers offering 500-to-1 leverage, arms crossed, looking at me, and they're like, "Your time's up, your time's up." I'm like, "Guys, it's only been 10 minutes. Like, I got 30,
Yeah.
So anyway, so that is something that's worth looking at, because the reality is that we all want to start by driving the Ferraris, but we don't even have a driver's license yet.
Yeah.
And the reality is that everybody who jumps in a supercar without being able to reach the pedals, even, most of them crash.
Yeah.
And, the guys, I know, I'm fortunate enough to have met people, and I think I've been around long enough to have met a number of people who've made, enormous amounts of money trading, but really they are the 0.24%, right? And they are some of the most disciplined, sort of boring people you'll meet.
Right.
Yeah.
Yeah, look,
the daily go out for coffee and take your dog for a walk thing that's their life, right?
Yeah.
The rest of the time they're reading, they're researching, because this is what they're passionate about more than anything.
Yeah. Look, the digital sphere has, and I know you have a little bit of an axe to grind with TikTok investment, right? Where the guys give you 30 seconds of investing advice, and you said this should potentially even be illegal on one of your tweets. So tell me, because I think this harms the market, and it obviously harms people's pockets. I mean, you see how many people lost money with GME when things didn't go the way they thought it was going. So tell me, well, I think that's why I invite you to the show, because you're in this digital sphere, but you're trying to do it with the common sense route, not the TikTok route, right? And so. Let me give you an idea. On Easy Equities, when I was still on campus radio, I invited Charles Savage for an interview on the radio station, and eventually it culminated in us hosting a basket of exchange traded funds on the tax-free savings account portion of the website. So if you go onto Easy Equities now and you go to tax-free savings account section of the website, you can find the quintessential basket, and it's got Satrix Top 40, S&P 500, MSCI World. It's got those kind of things, because we were focused on the beginner investor who doesn't know about exchange traded funds but just needs exposure and to get into the market now, right? So what's your advice for that beginner investor to get into the market now? But add in somebody who wants to become a trader like yourself. What is that first step? What is that first book? And what should they be looking at?
So I'll give you the name of the first book. I just got to open this thing here. Got to find it. I was busy working with it. So this is the book that we actually want to cover in this podcast. Hang on, I got to find it.
The Intelligent Investor. Listen, man, we've heard that many times.
No. It's not The Intelligent Investor. It's Introduction to Finance, 19th edition, something. It's like $170. Maybe I'll give you the link afterwards, and you can put it in the
for sure.
Below.
We can put it in the description.
So I think the best place to start is to actually, what I can show you, right? So I did this Power Hour presentation the other day. Let's see, I'm using my computer documents. Where is just one lap? Click power hour 21.
Live internet is so fun.
Dun, dun, dun. Yeah, hey, here's a guy. Here's a close-up of someone scrolling through his computer, trying to find something. So this is, and the thing that I wanted to say was like, not all pyramids are bad, but pyramid schemes are bad. So make no mistake.
For sure.
All right. Oh, sure. But yeah, now I forget that I can't.
You can't share screen.
But basically, what it
I
is,
should have warned you.
Yeah. So it's essentially you kind of start off building a pyramid, right? So you need a base, and that base starts with a very long-term sort of hold investment portfolio, or an asset portfolio. So this can include stuff like a house, if you will, or gold bars under your bed or whatever it is. But you need some sort of, fortress of solitude type of, asset base that sits underneath you, right?
Yeah.
Because there's two things that happen when you start trading. You very quickly learn that it is actually an immensely emotional thing. So you go through a number of different sort of emotional cycles. So there's a sort of a destructive emotional and behavioral pattern. So it generally starts, an example of destructive would be, it generally starts with there's some sort of financial stress or pressure that you're under. So you're looking for something that will alleviate that pressure. You discover trading. You then take sort of unconsidered, uninformed, excessive amounts of risk, which leads to you losing money, which now makes your financial pressure and or pain worse, and you stay stuck in this loop, right? So you want to break that loop and get into one more where you're feeling sort of security, a little bit of financial security, a little bit of confidence, which then leads to you looking for opportunities, or rare opportunities, or sort of one-sided kind of opportunities. And I mean, like a one-sided opportunity would be something like what the oil market's been doing over the last couple of months, right? So that's been a very one-sided sort of skewed opportunity because there's this big structural shortage, and it's a long story. I won't get into it. But when you then find those opportunities, you then have you're a lot more patient because you're not desperately trying to fill a hole. So you take much longer to make decisions, and you make more considered, better decisions. And it turns out, well, if you do that, you actually find success and you make a little bit of money, which you then put back into your long-term savings, and that increases your sense of security, right? So you have this positive feedback loop. So what you want to do is you want to kickstart that process somehow. And the way to kickstart that process is to build up savings, right? That's the only way. So you start off with a tax-free savings account. And now remember, your tax-free savings account, your contributions that you make, you can't, if I make a withdrawal, I can't put that back in.
Yeah,
right?
you're going to damage the account.
500K a lifetime that I could put in there.
Yeah.
So if that's where you start, that's where you start. And that is your fortress of solitude. You don't take money out of that, right? Until you've got a decent-ish kind of portion there and you feel like, you know what, this covers a year or two's worth of my living expenses. I now feel very safe because I no longer have to worry about how am I going to eat at the end of the month, right? And yeah, that's going to take a long time to get there. And the sad reality is you're going to have to cut a lot of expenses probably to reach those targets, right?
Yeah.
But lesson one, if you want to trade, if you can't save R1,000 a month, you can't trade. You can't be out there taking risk, leveraged bets with CFDs and all sorts of Forex and whatever else.
Yeah.
If you can't afford to save at least R1,000 a month. It's just a fact of life, right? So your first step is to build that asset base. And once you have, let's say, a year's worth of income saved up, at that point you can start saying, okay, well, where do I now find sort of medium-term opportunities? How do I think, okay, well, Sasol at 22, maybe I should buy it. I'll lament forever because I didn't. But
Same here.
But you start looking for opportunities like that, and because you're a bit more secure, you're not really in a rush. And then you start getting into sort of a momentum-based trading. And then from there, as your skill set improves and the amount of time that you can dedicate to it improves and your knowledge base improves, and this is a period of years that we're talking about, then eventually you can get into sort of more speculative trading and start trading derivatives and take gearing and all sorts of stuff, right? So a lot of the clients that we get actually kind of just start out with normal equity, They just buy stuff and they keep it. And, we help them build portfolios for the long term. And then when, they get to a certain point, you can kind of say to them, okay, well, look, let's take a small portion of your account. We'll open a second one for you. You can play around on that one. This one is your investment account. You don't touch that. Right.
Yeah.
And that's a better approach, rather than saying like, well, look, what you got to do is go and read this book and then read this book and then do that course. And now, open a CFD account and best of luck to you. You're going to be one of the 90% that don't make it. Right.
Yeah.
The only way to sort of ensure longevity is to think about trading is not about making money. It's about surviving. Right. If you can survive your first 2 years as a trader and come out break even after 2 years, you're already part of the 10% that's in the upper 10%, right?
Right.
If you can survive to year 3 and start making 10% return on your money a year, you're already part of the top 5%. Right. So once it's almost like a little, it's almost a little exponential. It's like most of the really good traders that I know, all of them have like a moment, like a click moment. Like it just sort of fell into place. Like there's stories that, from the day trading firms, there's stories of, guys that were there for, a year, didn't make money, lost money every single month, didn't make. And then 1 month they broke even. And the next month they made $5,000. And then 3 months later, they were making $5,000 a day, and that was after struggling for how long? And suddenly something just click and they get it. And you know what that thing is? It's generally, there's like a discipline thing that goes off. It's like you just get to a point where you're just like, you know what, I will not lose again. And it's okay to lose. Don't get me wrong. I'm not saying you can't have losing trades. You have lots of losing trades, but it's that the biggest loss that I've ever made was in one day was 83,000 Rand because I was cocky. I was middle of the day on a radio interview. Somebody said something about Steinhoff. Bought some. I was trading in the 2s at that time, 2 Rand something. And I'm on radio talking to someone and I'm dying, right?
Listen, brother, just hold, okay? If you hold, you'll eventually break even. It might be 10 years from now, but you'll break even. Don't worry about it.
So, then something you just kind of realize, like, I will never, ever, ever, ever do that again.
Yeah.
And you think like that was not even so long ago. That was like 3 years ago, right?
Yeah.
And you still make these mistakes. Okay, so every couple of years, I guess you have to press the reset button and take a massive loss until you just realize, like, you know what, maybe this style of trading isn't for me.
Yeah.
Maybe I need to give up on this. I'm good at swing trading. I'm good at sort of finding these imbalances or whatever. Finding little companies that have a good story and take a punt on something like that. Transaction Capital was pointed out to me by someone, and it's a company that I've grown to love. Jubilee popped up on my radar because it was a stock that over 30 days was up more than anything else, and I was like, what is this? And you go and dig and dig and dig and dig, and then you realize, wow, this is actually a little gem, right? So that's the stuff that I really am much better at. And when I stray outside of that, or when I do impulsive things, even today, now you see GameStop and it's going, and you think, yes, there's volatility, there's volume. This is like traders action, right? But I've got no plan. So I've actually just got to stay away, If I'm trading like the little option stuff that I was talking about earlier, like that's kind of planned. Like I can kind of see like, wow, there's a little pattern here that I can see. Yeah. So if I do this and this, I might be able to play it.
Yeah.
But
you
today,
see, like a book,
it's just a whole bunch of movement and no real plan. So you got to stay away.
Yeah, I read a book called A Random Walk Down Wall Street or something like that, and obviously it's an American book, so South African, kind of follows it to a degree, but you can't follow it the full way. But one of the things that stuck with me after reading that book, the guy just said, avoid exuberance, and it's one of those things. 2020 and 2021, in this crazy pandemic year where everyone feels like they're in perpetual chaos, they follow exuberance after knowing to avoid exuberance, but it just hits you out of the blue, and suddenly you're being exuberant again, and you're investing in things that you don't necessarily understand, right?
Yeah, because you're following hype, you're getting excited. So think about, okay, so how do I explain this? It's like a very primal thing, trading, right?
You're starting to
You
sound like
react-
Matthew McConaughey in The Wolf of Wall Street, my man.
But it is, if you think about it, there are two base emotions. If you can break everything down in the world, almost everything that humans do is guided by one of two things: fear or greed, right? So even, and I mean, this is out there, so this is probably why I'm single. Even love, right?
Right.
Often you love someone because of how they make you feel, right? Or because you have some sort of they're mine, right?
Yeah.
So that's either greed or fear of losing them.
Yeah.
So everything kind of boils down to those two things. And that is those are the things that the market amplifies. Think about what last week, right? The market fell, broke some trend lines, and it was just panic, right? It was, Tesla was down 5% a day. Boom, 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 boom. And it's just, everyone is like losing their minds. Fear. And then the weekend comes, oh guys, we're going to print some more money. Okay, cool. What happens the next week? Tesla up 30% in one day. I mean, there's no rationality there. That's pure greed, right? So you're going from one emotional extreme to the next emotional extreme.
Yeah.
And that's, good trading, you learn how to cut that out, and it becomes a bit more boring. And I've still fallen in that trap sometimes. And I got to constantly check myself. Like, am I being, am I being greedy? Am I being stubborn? Am I refusing to accept that I'm wrong? What emotion is driving me now? And how does that emotion influence the way that I make decisions? And if I can't recognize or control it, then I have to walk away. And then that discipline, comes in. And sometimes you do stupid things, like you're on the radio and you're like, hey, I'm going to do this. And you feel like you're going to die.
When you're live on air, things can go wrong, and that's exuberance, right? Because it's adrenaline. But I think on your website you've put it best, where you said, you have learned that successful trading is a product of self-awareness, self-discipline, and being part of a focused trading team. And that's what you say Herenya Capital Advisors is. And so that's herenya.co.za. You can go and open an account there. And Petri, on the text line, I see Carl says here, you can tell that you're a good trader and a good founder. You dress like Mark Zuckerberg. So there you go, man. You've got what it takes.
I put my fancy t-shirt on.
But listen, Petri, listen. Like I said, I have an easy equities basket of shares. We've got the quintessential basket on easy equities. Long term, by the end of this year, let's plug in. Quintessential loves collaborating with people, because I believe with this digital, democratization of markets and exactly what you guys are doing with Herenya, somehow we need to plug into each other and continue assisting South Africans in making good decisions when it comes to trading. So let me know where I can plug in, and we do a small collaboration.
I've got an idea.
Okay, go ahead.
I've got an idea.
Let's hear it live on the internet. Let's go.
So what we're going to do with this podcast thing, this educational series, if you can call it that.
Yeah.
I'm sort of planning season 1, the first 13 episodes. The idea is to go through a number of chapters in a sort of somewhat complicated textbook, and to bring in a guest, right? Someone who knows the stuff slightly better, or is sort of like an industry person who's been around a lot and who can speak from experience.
Yeah.
The original idea was actually to do a television show. But pandemics tend to change things.
Yeah.
So I would like to do 2 experienced people and 2 inexperienced people as a study group. And then we work through this content together in like a free format, up to, somewhere between 30 minutes and 2 hours an episode. And I think maybe you should join us as one of the group, if you like.
I am in for it. This is what Quintessential Z is all about. It's about starting at the very foundation and showing people almost in real time how to get into this thing. I think nation building is something that is really close to my heart, and so I want people to trade and make their futures, and be more financially sound. But you are Trader Petri on Twitter. People can follow you there for more advice. Well, not exactly advice, just I don't know, ruminations about the markets to say whether they are up or down. But definitely check out herenya.co.za and open an account today. We are hopefully going to show you more over time of how you can do that and how you can thrive. Listen, Petri, thank you for joining me on the Quintessential Show tonight. You've been an absolute gem. And I think there's a lot of value in the conversation we just had. Final thoughts from you.
Final thoughts from me. I think that if I can sort of add anything, people who want to trade, be patient, right? I think that's one of the most important things. I think we all run into this thing wanting instant millions. The tortoise always wins the race, always, right? Yeah. So be patient, trade small, and remember to learn before you try to make money. That's sort of the most important thing.
Yeah, brilliant. All right, so thank you, Petri, so much for coming on the Quintessential Show. So that is Trader Petri on Twitter and at Herenya Capital if you want to follow Herenya Capital Advisors, which I believe Herenya is Elvish for wealth. So a Tolkien fan in our midst. Very, very cool. Are you looking forward to Amazon's next version of whatever the Tolkien universe has for us?
I'm not going to lie. I am. I really, really am. There's so many amazing stories in that universe. So
I'm a bit worried about it. I'm just a bit worried, but I'll go in.
They took over The Expanse, and they're doing a great job.
Well, let's see what happens.
I'm hoping. Yeah, we'll see.
Let's hope they just don't Game of Thrones season 8 that whole thing. Let's hope it doesn't go.
No.
All right, Petri, thanks for joining the Quintessential Show. Have a good evening further.
Thank you. Same to you.
Cheers.
Cheers.